Hello, everyone, and welcome to the first in a series of FIXinars run by the Fix Next Generation team, represented today by myself, as well as Sapna Swali and Sakina Lalji, who you'll be hearing from later on. My name's Alex Ings. I also work at Credit Suisse in execution services, product management, and market structure. Before we kick off, I'd like to put a first poll question up. So this will just give us a better idea of which area of finance that you're all from. While we do that, a couple of housekeeping points. So today's session is run under Chatham House rules. So please don't quote someone without gaining their explicit permission first. The session will be recorded and may be available for replay afterwards. So today's session is going to be an interactive Q&A. So you can use the Q&A function in Zoom. You can post your question by name or anonymously, or you can use the raise hand function. If you do that, we will unmute you and let you know that you can speak. And if you could first introduce yourself with your name and your firm, please, before asking your question. And most important, no question is too stupid as part of this. The point of these sessions is to be interactive and provide useful information for everyone. If there's something you're unclear on, the likelihood is that someone else feels the same. So it's always useful to ask these questions and get a good answer. So pretty good mix on our poll: 36% vendors, 21% sell side, 14% exchanges, 7% buy side, and 21% other. So if we could put our second poll question up now. So again, these questions should give us a better idea of exactly who's on the call so that the panelists can focus their responses. So today's topic is a Q&A on the impact of market structure and regulation on technology. So I'd like to introduce our panelists, who are the co-chairs of the Fix EMEA Regional Committee and EMEA Regulatory Subcommittee. We have Rebecca Healy, who is also Global Head of Market Strategy and Insight at LiquidNet, and Matthew Coop, who is the Director at Barclays Investment Bank. So if we have the results of the poll, okay, so we've got mostly technologists, which is good, and some front office vendor sales and a fair few other as well. Okay, so without further ado, I'd like to hand over to Rebecca and Matt, who are going to do a quick introduction.
Hi, thank you very much for joining us today. We're very excited about this. It's a good opportunity to reach out to new members of the Fix community. We've got a short slide deck just to run through just some of the key issues that we think they are today. And as Alex mentioned, we really welcome your comments and input. Matt, over to you.
Thanks, Rebecca. I think when we're looking at this, I think it's probably good to sort of outline in terms of what we believe the intent of the regulators and what they're trying to do in terms of the review of what's going on. I think it's also safe to say that we are in a pretty active environment at the moment. I know from my perspective, and I don't know about you, Rebecca, but I seem to be constantly stuffed under a consultation paper either from ESMA or the European Commission, and the wave of regulation that we need to implement, I think, hasn't abated. But I think let's just quickly look at what they're trying to do and what are the core focus. I think when we look at this first point, that there is a definite drive to try and look to improve transparency in the securities trading and in MiFID instruments, and also looking to drive, and that again is looking at it from a cross asset class perspective. So looking at this in terms of equity than fixed income. There is a wider move to sort of increasing trading in fixed income instruments on venue. That also itself leads to questions about what trading protocols sit where and how they actually evolve and trade. Rebecca, I don't know if you've got any other.
Well, I was just going to say, I think it's worth taking a big step back because Matt's right. It's one of those things that you think, surely they'll give us a break now because you've had endless consultation papers and then there's one more that lands on your desk. And it's easy to get completely overwhelmed by the amount of regulation. But what Matt and I wanted to do was just to take a big step back and take a high-level view as to why do we have the regulation we've got in terms of financial services, and what are the problems they're trying to solve. And the number one problem is actually pensions. That's the big thing. They need to make capital markets work because we have a pensions crisis looming. And capital markets, they don't work in the way that they should. So as Matt's just said now, the regulators believe that if they improve transparency, then all of a sudden there will be an influx of people wanting to invest in European capital markets. Now, we all know that isn't the case, but what we need to do is work with the regulators to try and get what their objective is into a practical solution. Now, Matt's just mentioned the fixed income instruments, and that is an enormous challenge because frankly, it isn't how the market works right now. So we've got where we need to get to and where we are now. And it's that leap of how we as an industry work with regulators to make the policy objective happen. There's also, alongside fixed income markets, they also have the same initiative in relation to equity markets. And improving transparency in equity markets actually means getting liquidity onto continuous lit markets. This is why we've had all the back and forth around periodic auctions, the SI regime, limiting dark, the implementation of the double volume cap. All those factors boil down to one central policy objective. It's to get more activity on continuous lit markets, to support price formation and make sure primary markets are still attractive to companies looking to issue shares. So again, it comes back down to simplifying what the objective is. And Matt, do you want to talk about accuracy of reporting? Because obviously that's a big thing.
Well, I think that's an important point, Rebecca, because I think if we go back to all this stuff and we look at the implementation, I think it's great to see we've got a large amount of technologists and different parts across the transactional life cycle. Because when we look at the implementation of MiFID II, it's really important that we get the context right and we get the data in an accurate way. And another area which we're going to see coming through is definitely going to be the quality of data, the amount of data that's available, and actually the quality of reporting, whether that be transaction reporting or post-trade reporting or pre-trade transparency reporting. And how is that actually playing out? And that leads all the way into the data standards. And that is a debate that's going to sort of carry on. And I think it's an important area to focus on because it's very easy to focus on the key issues of the market structure debates that Rebecca was talking about there. But if we don't get the data right, actually having an effective debate is actually quite a big challenge as well.
Yeah. And again, it goes back to when we mentioned earlier about, the reason we're in this position because of the pensions crisis. So there's Capital Markets Union is that fundamental core element of the European Parliament, where they believe that they can get individual investors investing in equity shares. What they want to do is get hold of all the money that's sitting in savings accounts, which with low interest isn't really doing anybody any favours, and to move that into equity markets and to move company dependency away from debt into equity. So if you can keep these core objectives in the back of your mind, that's really when everybody keeps saying, what are the regulators doing now? Why on earth are they looking at SI again? It's because they want to make European capital markets as attractive as US capital markets. And there's one more important point, which I'll leave Matt to talk about, that lovely Brexit debate that underpins everything at the moment.
Well, I mean, I think the key point here, again, is we're looking at trade flows. And I think, a large number of people on this call have probably been involved or touched in a Brexit program or Brexit impact throughout, the last few years. And one that underpins all this is actually how do the workflows operate? How does this come together? And then wider than that, there's obviously the political discussions that happen around Brexit, but there is the getting down to the basics of how do we actually put this workflow together and how does this interlock when we have a cut and paste of two different types of regulation and where the deviations start to maybe creep in or not.
And that's a really important point, Matt, isn't it? Just in terms of, we've already heard that the UK is not going to implement CSDR. So it is, how do you manage implementation of one piece of regulation in one jurisdiction and not in another? I mean, we've already seen the challenges when it comes to unbundling, when you're a global asset manager trying to manage unbundling in the UK and Europe and not necessarily in the US. And it's these practical implications of how you implement the regulation that I think is the best place that FIX can help. So what Matt and I wanted to talk about here was what next for MiFID II. So everybody's banding around, there's going to be MiFID III, complaints all over from various market participants about it being too wieldy and too complicated to actually get what we need in place. So the first point of call is we've now got the German presidency, and because COVID-19 has created additional burdens on the industry, I think the German presidency, I heard, has only like 7 rooms or something for teleconferences, which is creating additional headaches because people can't meet in person. So it's really challenging the way that Brussels has done business in the past. And so they've decided they're going to take all the things that are wrong with MiFID II and they're pulling out those areas that think, right, this is what we can address now. We can get a quick fix on this, and we can get it over the line ahead of Brexit. So, Matt, do you want to talk about like the key areas that they're actually looking at within the? It's not everything at all.
No, I think that's an important point to make, Rebecca, is the fact that actually it isn't everything. And when we actually look at it, there are a very few number of points that are probably going to be addressed. I think, that they've set a number of criteria because they are fast tracking this. And I think, potentially, rumour has it, we might have some draft regulation end of next month, maybe just after the summer break. So what they're looking at is to make sure that the areas they address are non-contentious and that they can be affected. And the criteria they put to this is to ensure that the changes they make can potentially be positive to the European Union helping sort of build coming out of the COVID crisis and help financial markets sort of evolve. So when you look at the areas, I think the area I'd say it's sort of being impacted and where the changes are going to happen is very much in terms of investor protection and looking at disclosures of information, looking at various different sections. Now, the full list, we still don't know. I think it's an interactive debate, but I think that's the area where the key focus are. There are always edge cases where is share trading obligation going to fall into scope or not? Or is there going to be a quick change for derivative trading obligation? But I think, what completely gets in there, we just don't know, and it's changing potentially daily.
Yeah, and I think it's politics now, and I think that people have to bear that in mind. And again, it goes back to what we were talking about at the beginning. The reasons why the regulators are looking at what they're doing, there are sort of core areas that they're not happy about, and they keep coming back and keep revisiting. The increased transparency that we mentioned earlier, and Matt, do you want to talk about fixed income first, and then I'll talk about equity?
Yeah, I think the important thing to call out here is that we are going to see a MiFID 2.5 and probably a MiFID 3 when we look at this. So the MiFID 2.5 is that fast track stuff that we just talked about. And then the MiFID 3 bit, let's face it, we've got to give something me and Rebecca to talk about, is there's going to be a big MiFID review next year. And so all the areas we're now just about to talk about, they're going to be included in next year for the wider MiFID review, and where we'll potentially have changes there. So I think, first up on the point is around the fixed income trading and increasing transparency. Now, on the point above that, we've already had consultation papers. And as we mentioned, we've had consultation papers from the European Commission and ESMA covering a wide number of subjects. One of them is around fixed income transparency. What's that meaning? Well, it's asking the question, should we include increased pre-trade transparency levels? Should we change how post-trade works? Is it too complicated in terms of the structure? And I think, the real big question that is still going out there is around the consolidated tape. Should we have a consolidated tape? And if so, for which markets?
And the best thing would be for all activity to be traded on continuous lit markets. Now, clearly, that isn't the case if you're looking at best execution. There are reasons why people choose to trade in the dark, and a lot of that is in relation to information leakage. Now, one of the big debates that we've had with regulators over the last couple of years, and we actually wrote a FIX buy-side working paper, which is available for anyone who wants to see a copy of it, in relation to the ESMA consultation, to explain why dark trading mattered, why midpoint trading in the dark mattered, because essentially that actually equates to price improvement, which is what goes into people's pensions when PMs are executing orders. So the areas up for consideration at the moment, but just how much to move dark trading onto the lit, while recognising, and again, this was an important debate that FIX as a community won with ESMA, in that ESMA now stated in their consultation paper that they recognise the benefits of dark trading for large institutional order flow. Now that was an important move, but it's now around what's the right balance between what should go onto the lit, onto continuous trading, versus what needs to remain protected in the dark. So the regulators are saying, okay, let's ring fence that large in scale trading, because we know that that needs protection from information leakage and the impact that can have on people's pensions in terms of performance. But how do we get more continuous lit activity? Their proposals are to look at moving sub-LIS activity onto the lit, removal of the reference price waiver and the negotiated trade waiver, potentially increasing the threshold for the reference price and the negotiated trade waiver. So as Matt says, there are so many variables under discussion right now. And how does that impact you? It's being able to stay abreast of exactly what those changes are, and then what does that mean to your workflows? What changes have you got to make internally to make sure that you actually meet the regulation? But the biggest question mark, which we've been talking about since April 2018, Matt, SI, what's going to happen there?
I think we've been talking about this discussion for a little bit longer than that, Rebecca. I think all of us would agree in terms of our whole career. So the SI discussion, and I think this is actually should be approached in terms of looking at it from a cross-asset perspective. And when you look at the consultation papers, there are very much pointed questions about what is the role of a systematic internalizer in the market and where they're trying to go. I think everyone would agree the SI is there to provide principal liquidity and to engage accordingly. And I think the continual debate of what is happening and the question and the conversation around how much market share does a systematic internalizer have? And I think this is a really important area, because when you're talking about your previous points, across fixed income and equities, the really important question is what volumes are being done where, what is where. And I think across asset class, the amount of deep data cleansing, data engagement that we have to do is pretty significant. And a previous colleague of myself, he spent hours digging through the data, and if there was a flag that he didn't understand, it wasn't worth knowing. And the amount of in-depth conversations that we have around this, I think, is really important. So again, the data feeding into this argument and debate about what's happening where, what's going where, what's the right outcome for the end investor, is going back to that data, the quality and the standards that need to be addressed.
And that data actually feeding into the next point as well, the reclassification of best execution. I don't think we've got the end of the debate around what is best execution. And of course, in the US, you have best execution pretty much equated to best price, and you have the route on rule. And actually, the US regulators are now looking at, is the route on rule right for all instruments? That in itself is going to create a two-tier market. So what does best execution mean for one stock or one instrument relative to another? There are a number of factors which European regulators, in their sort of 7 steps, they were very keen to stress that best execution was actually a process, and you needed to be able to robustly demonstrate that process. But that comes back down to the data. If you haven't got the right data, you can't demonstrate the right process. And so all these things, all the issues and the challenges for the regulators are still so very heavily interwoven. RTS 27, there's a lot of industry complaints that it's frankly not worth the paper it's written on. It's too confusing. We need to make it simpler for industry participants to be able to understand. And that's really, again, where it comes back down to fixed participation, industry participation in feeding back into the process to be able to say, okay, we understand what your objective is. What's another way that we can actually reach that goal? How can we get you the data that you need to make sure that end investors are making the right choices when it comes to execution without creating unnecessary complication and a lot of noise that doesn't necessarily deliver value? But in terms of US and Europe, Matt, do you want to go on to the next point? Because that's very hotly contentious as well.
You're chucking me all the political hot potatoes. Thanks, Rebecca. So I think, obviously, when we were going through this, one of the key fundamental sort of pillars of MiFID was around unbundling and inducements. And there's been a lot of focus within certain European member states where they are looking at potentially rebundling certain products because a few regulators, the AMF in particular, have made some public reports around SME research and saying that the coverage that they get for small, medium enterprises is not enough. And they think that if there was better research coverage, that would then incentivize end investors to come in and invest in small companies and be able to see that growth. It's an interesting discussion. There are a number of different routes which are being assessed in terms of how this could be resolved. But it does seem to be a very core pillar of this, and it also needs to be put into the MiFID quick fix as well.
Yeah, and it takes us back to the challenges that the regulators have versus their means to make that happen. And unbundling is one of those core areas where, the assumption is, okay, if there's more research on small caps, people are going to invest in small caps. And we all know that isn't the case. I think it's Mercer, 96% of European funds aren't invested in small caps. In actual fact, small cap analyst coverage has gone up, but it's mid-cap coverage that's gone down. So you've got the overarching policy objective, and then the means by which the regulators believe that they're going to solve the problem. And again, this is where the industry comes in, because it's actually, you can sit in a room in Brussels and come up with great ideas. The challenge is, how does it actually work in practice? And that leads us on to the next point. CSDR, CSDR, if you've got it down on paper, works fantastically well. And it's a good incentive to make sure people settle trades. The problem is it's not actually how the market works in practice. And Matt, particularly in fixed income here, mandatory buy-ins, that's going to be a massive headache.
It is, and I think the whole industry has been in agreement in that. And particularly when you're looking at illiquid instruments and how this is going to play out, CSDR is going to come in force for mandatory buy-ins. Article 6 and 7 is going to come in force February next year. I know a large number of buy sides across the world, because this is down to where you're settling the instrument. So if it's settled in the European Union, i.e. Euroclear, you have a big impact there. And Rebecca, as you said, I'm conscious of time and needing to move on, but the UK is not implementing CSDR. So what's that actually going to be doing? I think just to sort of wrap this slide up is, the Brexit side of things is the great unknowns. And I think it's really important that we keep track over the next coming quarters to actually see how that Brexit debate plays out, because we should never underestimate that things will be leveraged in political reasons. And so from a practitioner's perspective, it might not make sense. And so, we need to keep that lens over all these different changes and how that might be used. So I think the key thing here is, what's the challenges for the industry? I mean, Rebecca, from your perspective, when we're looking at this, I just see it always coming down to FIX. And data.
If you look at the first question, what level of transparency is the right level? Again, we know what the policy objective is. They want to make markets more transparent. Well, it's no good making markets transparent if what you're producing is poor data, because then people are making poor decisions based on inaccurate data. And how do you get better data? That's through industry standards, agreed guidelines. We've got the point at the bottom about the deferral regime, but that is a classic case in point. If you have different regulatory bodies, different member states implementing different versions, if you have different firms implementing different interpretations of MiFID II, you end up with noise, and it's of no value. And this is important, and it's where you potentially can get involved here, just within the sort of the creation of industry standards and industry guidelines. But again,
I think consciously we want to be able to move on to some Q&A, Rebecca. So I think that goes back to our final slide, which is the real impact here. And in terms of, I think we've already had a good question come in, but is actually, what does FIX need to be doing around this? And what does that actually mean for you as a person? I mean, Rebecca, in terms of your career and how you've evolved, why has FIX been important, and why has it been important from the regulatory response?
Well, I think if I go back to sort of, when I started in the industry, and, there's always that idea that actually you don't really know a huge amount. The regulation is very confusing, it's very difficult, and you can easily get intimidated. But just as Alex said at the beginning, there is no question that's too stupid when it comes to MiFID II. It's very complex and it is evolving. So there's always the opportunity to learn. And if you have the courage to step up and get involved, for me, that played dividends. I don't think I would have the career I have now if I hadn't got involved in FIX when I did.
I completely agree, to the extent that 100%, I would not be in the role that I am right now if I hadn't got involved in FIX and taken the roles that I've done.
So what we see happening at the moment, though, in terms of FIX, and they would put up some key areas where we've actually started to see good engagement with ESMA Because we are a non-for-profit neutral organisation across all the industry, that means, we've got no axe to grind. We're actually here to help the regulators and help the industry as a combined collaborative effort. So, as we say, that's where you come in. We need your help.
Thanks very much, Matt and Rebecca, for setting the scene there. So now I'm going to hand over to Sapna, who's going to cover the Q&A.
Yeah, thanks. Hi, I'm Sapna Swali. I'm Sales Director at Trade Valor and also part of the NextGen committee. So yeah, we've had some questions come in already, actually. So the first one is from Elena Tasheva from Exact Pro. Her question is, what is your view on the regulations around technology and financial market infrastructures? Do you think they provide sufficient guidance on quality and resilience of technology platforms, or are they rather impeding the actual innovation?
I'm going to have to say it's work in progress. If you think about where we were to where we are now, we're not the only people who are learning. It's also the regulators. So, it comes back down to the point that they come up with ideas, and then it's just the implementation of those ideas and the industry feedback, which is the reason why we've got the consultation papers, where you can actually see what's worked and what hasn't, what needs refining, retuning, to make sure that you keep that technological innovation in the industry.
Yeah, I think from my perspective, there's an angle to this question that probably should be looked at as well. I think all of us within the financial markets industry really wants to be able to do innovation. We want to be able to evolve. We're all intelligent people and we want to make sure that we're trying to do our job well. But there is one element which does crop up, which is kind of legacy infrastructure versus new infrastructure. And how do I get that change across? How do I adjust it? How do I get involved? And I think the important part there and the link to enabling that to happen is about data standards. Because if I have those data standards in place, the movement of data to a new platform, the new engagement actually becomes a bit smoother. It helps. I think, the key thing as well is the tsunami of regulation that we've got and has been talked about massively across over the years is how do I actually innovate when I've got so much to do just to be able to keep standing in terms of regulatory compliance? And so I think the answer is yeah, everyone wants to innovate. Everyone wants to drive forward. It's just we've got to be able to move on and see the light at the end of the tunnel.
And free and open standards, Matt, the other important factor.
Free and open standards, definitely.
I'm going to actually run it. I think that's probably a good point to run into a poll, actually. And this poll is actually going to be directed towards technologists. What percentage of your technology development is related to regulatory change rather than business development? I think this is obviously quite important to understand, not only from your perspective, but, at the moment we're seeing more and more technologists having to do the sort of run in the mill as opposed to growing business. So, but it looks like it's pretty even across the percentages. I don't think that there's very much in it here. So we're seeing less than 20% for 30% of the technologists, 40% for 38% of those technologists, and 40 to 60%. So yeah, it seems to be pretty even across the board, which I think is quite interesting.
I wonder also whether it's the fact that actually regulatory change can often be a business opportunity. So in some senses, occasionally, if you're keeping abreast of the regulatory change and incorporating that in your technological innovation, it does actually represent opportunity rather than a burden in some instances.
Absolutely. We've seen that with the SIs in particular, with this whole crop up of new SIs coming in with the regulations around that.
I think there's two different regulations as well. You kind of have the ones you have to tick box and you have to deliver, and there are other ones where they do create opportunities. And I think that's the important part. And from my perspective, where I see a market structure role is very important, is that's where we're meant to be sort of finding those opportunities and being able to make sure we can flag them and to make sure you can capitalize them.
So going on to the next question, what do FIX feel are the greatest challenges for the future?
Volume regulation.
Yeah, I think it's getting the work done and getting it done effectively. I think the key thing as well, from my perspective, is making sure that we have the FIX NextGen coming through. I think events like this is critical. I was very fortunate early on in my career with a few people who are still involved in FIX, getting me involved and coming through. And I think that the key part as well is making sure we've got new blood, because that means new ideas. It means new engagement. It means different perspectives coming in. And so that's the reason, Rebecca and myself, massively support Fix NextGen because we need to have the whole industry engaging, because it can't be an industry standard unless we have that engagement as well. I think we've got really active working groups, which is brilliant, but we can always do more. And with the regulation expanding wider as well and impacting different trade flows, you always need those different experiences as well.
I have a question from Christian Smith. How long do you think it'll be until the regulation is at a point where it doesn't need tweaking? Do you think MiFID III will be the end?
I've got my stock answer that MiFID was the biggest piece of global regulation ever implemented. And the scope is so broad, it's massive. I think the tweaks are going to constantly go because the scope of the instruments is massive. So the tweaking is going to keep on going, unfortunately, for a while yet, because there is so much that's been implemented.
I think there's another important point, actually, and it's not just what is taking place in the industry right now. It's actually the wider societal changes that we're seeing. So the whole move to ESG, the capital markets in a post-COVID world, that is going to really change how the regulators are going to have to pivot what they do. And to Matt's earlier point, actually the people who've been involved in the industry thus far, there's a lot of individuals who are very used to a certain way of doing things. And we do need that new blood, those new ideas to actually step up and step in and get involved, because we're going to have to rethink what we do. And when we talked about the tsunami of regulation, it's not just MiFID II. I mean, the whole host of regulations that are coming on board in relation to ESG, that's moving everything up another notch in terms of what we're going to have to deal with and how we're going to have to interact with data. So you think about data that we have today, a lot of that is, normal data, as we call it. It's not the alt data, and different new sources of data that people have to include that are non-financial. So, that we're on a steep learning curve here, and we really need, we need FIXGen participation.
Right. I've got a couple of people who have put their hands up. I'm going to start with Tom Jordan. Remember, Tom, to introduce yourself and your company.
Hi. Thank you. Tom Jordan. I'm with Jordan & Jordan, and we're in the United States headquarters. Consolidated tape, right? What is the status of it in Europe, and your view on if it will happen, and if so, what year would that be?
Thanks, Tom. That's a great one. That's always going to be challenging. I think the consolidated tape will happen. I think there is demand for it. I think you see the industry responses around that. There's not necessarily agreement in the whole industry about what scope should be where, what shouldn't be. But I think it will happen, because I think consolidated tape for me is a massive opportunity to be able to increase data standards and to help that transparency flow through and have that effective market structural debate. When it happens, I think we're still a few years out, unfortunately.
Yeah, I think it's important here, isn't it? Because obviously FIX have done a lot of work with the regulators around consolidated tape. And it goes back to this idea that actually, you've got an idea on paper, how do you make it work in practice? And the sort of FIX MMT standards and the work that certain groups have done in that space, primarily for equities in the first instance, though I'm not to steal any thunder, the fixed income working group on the consolidated tape is well underway. But actually, if we, again, one of the things that we're trying to stress to the policymakers and the regulators, keep it simple. We're 95% of the way there in a post-trade equity consolidated tape. We can make this happen. But if we try and boil the ocean in one go, we're going to fail. Whereas if we get our post-trade data standards right, then that leap into producing consolidated tape could happen sooner than potentially people realise.
Thanks for that. So I've got another question from an anonymous attendee. Following the recent ESMA consultation on transparency in equities trading, what changes can tech teams expect to come their way, and what sort of timescales for implementation?
Well, this goes back to what we were saying earlier. It could be the removal of the double volume cap. It could be the removal of the reference price waiver and the negotiated trade waiver. It could be recalibration of large and scale. It could be the removal of SI as an execution venue. I mean, there are so many variables. And this is where, again, we'll go back to Historically, the industry wasn't very good at sharing information. Everybody operated in silos. Everybody was a bit, hold your cards to the chest, don't tell your competitor what you're doing. Now we've realized there's just too much going on, and it's easy for things to get missed and easy for you to find yourself 2 steps behind the curve. Whereas if you get involved in the working groups and you collaborate and share information, that's when we can all stay abreast of the regulatory changes and work at finding potential solutions that work for everybody, not just one type of market participant.
Yeah, I think to answer the question in terms of timescales, if we're purely focusing this from a front office point of view, I think a large amount of timescales are probably going to run into, potential sort of scoping exercises maybe towards the end of next year when we have some draft regulation in terms of looking particularly at SI changes. But the other part that we should be bearing in mind, as we said, with all this stuff and mentioned as the final bullet of the first slide, was Brexit. So, Brexit is obviously going to have changes. People have their own plans and what they're trying to do, but, all these things interlock in terms of how regulation comes in. So I think there's a slight reprieve at the moment. So that, as I said, that quick fix is very much focusing on investor protection type issues, which will be delivered this year. And then the big MiFID review will be kicking on next year. It's a question of how quickly they get the draft reg out, but 21, 22, I think is going to be good.
And also the UK response to Brexit negotiations, because that will obviously have an impact on how European regulators choose to respond and how quickly they choose to respond.
We do have other questions still. So actually, it's quite relevant to the previous one. Adam Ragle Levy has a question. ESMA have been making a lot of changes to SI trading. For example, the tick size requirements, which go live tomorrow. Do you think ESMA will ever be 100% comfortable on SIs filling orders?
That is a very interesting one. I think regulators understand the need for risk and liquidity provision. They do recognise that. I think their challenge is when they see SI clips taking place in sizes that are smaller than the activity that takes place on a lit venue. Now, of course, this is when you get into the realms of understanding execution strategies, and you may have a grandfather order, and so therefore you're doing a small clip because you don't want the information leakage. It's a lot more complex than just saying SI activity that's in 4,000 euros should be on a continuous lit market rather than using an SI as an execution venue. But there is that fundamental trade-off between European regulators being much more used to an agency model versus the UK regulator being much more comfortable with the provision of risk and liquidity.
I think having the ability for the end investors or the professional investors, depending on where you're coming from, to be able to choose the protocols of how they want to execute, I think is appropriate. I think the key question, if I was a regulator, is I really would want to ask in my mind, what's the right outcome for the end investor here? And the good thing is actually having varied selection of which liquidity provider, whether it be a multilateral trading venue or someone who's providing bilateral risk. It's the ability to be able to have varied choice and to ensure that you can execute appropriately. Because in my mind, I always want to, make sure we're doing the right thing for the end investor. And that should be the question that's being asked.
I think the other, again, going back to Brexit and politics, there is an overarching concern from European regulators is that they will see a liquidity drain from Europe to the UK, or even potentially the US, given the amount of SI liquidity that actually takes place on US bulge brackets. There is that as another factor that they have at the back of their minds to try and get themselves comfortable with what is a good SI versus what is SI activity that they don't actually like. And I think this is the question that they're grappling with at the moment, and why it's so uncertain as to the final outcome in relation to whether they're going to restrict SI or remove SI entirely as an execution venue in equity.
Right, I think we're going to start wrapping up now. I've got one final question before we do. Quickly, how well do you believe the regulation translates into good technological standards?
I think, and this is slightly biased, but I think good technological standards come from the practitioners. It comes from the people who can articulate and understand the trading workflow. And so my personal view is I think it's really important for the regulators to, when they're building this regulation, to actually reach out to say, this is what we want to achieve. How do we get that from a data perspective? And then let the industry work on it, come back for it to feed in, but for the regulators not to prescribe the data standards. Because if they start prescribing things, there are all kinds of different edge cases and different complexities in financial markets, which really create sort of the issue.
I'll give you an example. So the best execution reports that first came out, there was a FIX working group on best execution. I think we got to version 35 of a very, very lengthy document, which was back and forth between different industry participants as to what does this sentence mean in terms of what data do I need to put in a particular box. And it was crazy things like, they say that we have to put in a time factor. Right, is that time factor British summertime, Central European time? You know, this is where actually Matt's right. Unless you have that industry collaboration, you can't take the regulatory objective and actually create the right data to put in the right box. And that's where I think we can help deliver good technical standards that meet the regulation rather than the regulation creating good technical standards.
Excellent. So just to finish off then, I've got one last poll. I think, today's conversation is really going to help answer this. So how do you rate your knowledge on the details of current regulation? Well, yeah, I think, we've got Sakina coming on in just a moment. Sakina's going to be rounding up and closing. So thank you from me. Sakina?
Hi, yes, so I get to introduce myself as well. Hi, I'm Sakina Lalji, Sales and Business Development at FIXinar. And really just to say a huge thank you to our panelists, to co-chairs Matt and Rebecca for a fantastic session. Thank you to the FIX team, to Amy, Naomi and Maria for helping us put all of this together. And last but not least, to all of the attendees, everyone that has joined us here today on what might have been your lunch break. I heard this webinar session was so hotly anticipated that one of the UK's main broadband suppliers fell over this morning. So I'm not sure if they're back up as yet, but hopefully that's a sign of things to come for the popularity of these webinars going forward. As you will have heard from Alex at the start and from our panelists earlier as well, the whole point of the NextGen group is to provide opportunities for those who are earlier in their careers or at mid-career level to step up and get involved in FIX initiatives, and a chance for us to also provide sessions such as this to help answer questions, to provide educational and learning opportunities. There are two key opportunities that are coming up that I believe FIX will be sending an email about in the next couple of weeks. So if you are interested in getting involved, there will be two new working groups. I believe one will be an EMEA Business Practices for Fixed Income group, and the second will be EMEA Business Practices for Equities. So if you are interested in getting involved in either of those, you can drop us an email. I believe there will be a splash screen just before we finish that has the contact details. And also you can find us on LinkedIn. So we have a LinkedIn group conveniently named FIX NextGen. So please feel free to give that a follow. If you have any feedback or comments on today's session or any particular topics that you would find interesting for future, please feel free to get in touch with us. Thank you once again, and hope the rest of your days go well.
Thank you for joining.